The reason I put up the fairly simple slide of the nickel price is just to sort of highlight where we have been and perhaps more importantly where we can go. So this is where we started, and this is obviously the bull market, and I think the key thing is this period of price performance, of whether it implies that we're going to see a period of relative price stability. And I think there are a number of factors which possibly suggests that this could be the case going forward. This obviously highlights the bull market for nickel. It also highlights what is our own base metals index. As explanation, what we do is just provide a simple arithmetic average of the 6 base metals. This is in contrast to the LME index, which is heavily skewed towards aluminium and copper. And we feel that it's a sort of better indication of underlying conditions that affect the sector, rather than being skewed to one or two particular markets. And after this outperformance, the chart generally highlights that nickel has underperformed, and this is certainly in line with our view of the fundamentals compared with the other 6 base metals on the LME. The reason that we have this chart is that nickel does have competitors, which we'll discuss later, and the surge in prices here obviously did have implications for consumption further down the line. But again, we're starting to see a return to some sort of longer-term relationships where ferrochrome prices and nickel prices are roughly moving in tandem, and molybdenum prices are bubbling along the bottom. The key thing obviously is the relationship between ferrochrome and nickel, where the switch between 400 and 300 series can be quite extreme, which we will look at later. But again, we feel that we could be in for a period of relatively stability within the nickel market. The key thing about nickel demand, or its major market, is that demand is not the problem. There was a blip caused by the high prices in 2007, which did affect the austenitic ratio. But overall, the growth rates that we are seeing are above the long-term trend. If you look at what happened in 1990 to 2000, it was 3.1%. Obviously, whichever year you choose, your start date can affect the outcome. But then it slowed to 2.6%. But since 2005, obviously driven by China, which we'll discuss later, it's now 3.8%. So we would say that it's above the long-term trend, and it's above most other industrial commodities. So that is not the problem for the nickel market. This is stating the obvious in some respects, in that China has driven the growth within the growth rate of 3.8%, which I highlighted between 2005 to 2012. There have been wide regional variations, and and China obviously has been the beneficiary of this. But also, we've got to recognise that other nations such as the BRICS are also boosting their market share. And the key thing going forward is whether this is sustainable. And our view as a research group is that the whole issue of urbanisation, infrastructure, the growth in per capita income, they are still relevant. They have driven the consumption growth within China, which has seen its share go to 42%. But those factors are still in place. Yes, we're seeing some slight concerns short term about the level of Chinese consumption, given high levels of nickel inventories within the country. But that should not distract us from the fact that the factors that have boosted consumption over the last 5 years are still very much in place. Urbanisation is a key issue. We believe that that what we're seeing within China is that the urbanisation within, which has been centred on the eastern seaboard, is now being duplicated inland. And this has significant implications for infrastructure. So what we have seen of an average annual consumption growth rate of 3.8% since 2005, we feel is the norm. Short term, prices are going to be affected by its major markets. And I think this chart sort of highlights the fact that once the demand growth from stainless steel production disappears, i.e. have a negative year-on-year change here, and you have limited year-on-year changes here, and sharp year-on-year declines post-Lehman, will inevitably have an impact on prices, and that is clearly shown by the decline here down towards $10,000 per tonne. What we are suggesting that short term, that the stainless steel industry, in some respects it's good for the nickel industry in that it is characterised by oversupply. In the stainless steel prices are competitive against its other materials. So we're not seeing the situation that we've seen in the copper industry, for example, where consumption has lost out to aluminium, and the key driver of the copper market has been the lack of supply rather than strong demand. We feel that the stainless steel industry, when you look at the prices of stainless steel, the underlying base price, rather than including the alloy surcharge, highlights that it is pretty competitive. So we feel that short term there will be limited gains in production because the stainless steel mills are trying to boost their margins, and we're certainly seeing lower production within Europe. However, longer term, the growth rates that we are projecting of 3.8%, we think are sustainable going forward. The other key thing about nickel consumption, obviously, is not just the level of stainless steel production, but also the austenitic ratio. And we did see a reaction to the very high prices that we saw, both on an absolute basis and a relative basis compared to ferrochrome in 2006, 2007, which led to a significant reduction in the austenitic ratio. So we did have the problem, or the nickel industry had the problem of coping with quite a sharp reduction. This obviously reflected both 400 series and the growth within China, where a lot of the growth was focused on 200 series with a relatively low nickel content. I think what we would say is that demand is not the problem for the nickel market. First of all, one has to put the 15.8% increase in 2010 into the context of the sort of post-Lehman declines in flat consumption. Perhaps more important is the type of levels that we think is sustainable going forward, and our long-term growth projection is roughly about 3.8%, but we still feel we're in a position where over the next 2 years the consumption growth will be above this. We still buy into the argument of the long-term growth consumption prospects within the emerging economies. To a certain extent, this is at the expense of the mature economies. But the bottom line for the nickel industry is that we think that the demand environment is going to be reasonably positive going forward. The problem is for the nickel market is whether there's too much supply, and people have, including myself, have been focusing on whether the new projects from MPI, from the ferronickel projects in Brazil in particular, is just going to overwhelm the market. I think sometimes we overlook the fact that nickel production has been growing for some time. So the base is high, and our view is that from this high base that there will be continued supply growth from current levels. The key thing is MPI production within China. This really has been quite extraordinary. People focus on Goro, they focus on Ambatovi. They are projects which, if they produce to their capacity, they could be 60,000 tons per year each. But we've got a situation where Chinese NPI production has gone from just about 0 to 260,000 tons per year. This is 4 times the size of Goro, and it's sort of crept up from behind for the nickel industry. I think without the NPI production, one would have seen nickel prices going back towards the $50,000 per ton level that we saw in 2008. But it's not the only source of extra supply. When I say recovery from strike-affected levels, that is primarily Vale, and going forward, that is out of the equation. Reactivation of idle capacity, again, that primarily reflects Xstrata with the restart of Falcondo. again, going forward, we'd expect that to have less impact on the market. Increased utilisation at existing facilities. This just reflects higher prices and a slight increase in utilisation rates. It certainly is not going to be critical for the nickel market going forward. This sort of highlights the Chinese situation. As I said, within the period of 2008 to 2012, had it not been for the surge in this production, then no, the nickel market would have been exceptionally tight. It also gives our forecasts of production for 2012-2013. The bottom line is that we feel that the production growth from this source is going to slow, but possibly it could be more than matched by growth from ferronickel production and HPAL production. I think I mentioned that I don't think that demand is the problem for the nickel industry. We're suggesting that additional consumption this year will be close to 80,000 tonnes, and next year will be just over 100,000 tonnes. But the problem is, if you're a nickel producer, is potentially the increase to supply. And as I said, we're taking a fairly cautious view about MPI output going forward, just assuming that it's going to be around about 10,000 tonnes this year. And then next year in our supply-demand balance projections, we are suggesting that actually it will be flat. So this highlights higher production from existing facilities, again, which realistically will, due to capacity constraints, will slow next year, which puts greater emphasis on the new production, which is overhanging the market. We feel that we have taken a fairly conservative approach to additional nickel supply coming on. There are two ways to analyse higher production. One is to just look at the capacity that is coming on stream, and then to apply what is now called a disruption allowance, which says basically we are overestimating how much production will come on stream. Therefore, we take away the disruption allowance. What we have done is just to try to circumvent that and to give what is a realistic assumption of what supply is coming on stream next year and in 2013. But the key thing is that our projections of 6.6%, 6.7% are much lower than the 11.2% and perhaps more importantly the 8.9% seen last year. So we're not really taking a particularly bullish view on the success or otherwise of the greenfield projects. And just talking, everyone will have their own view about how much new capacity is coming on stream. But let's face it, for the nickel industry, it is not new for there to be question marks about the success or otherwise about these new projects. people will no doubt remember about the first generation of the HPL projects in Australia, which was not hugely successful. Also, the timing of Voisey's Bay, which was continually delayed. Even the projects which are being considered now, Goro, Ambatovi, Piando, they have all been delayed. So that's why we feel that the supply projections that we're giving here are relatively conservative. Also, when you look at the companies which are producing this extra production, they are very different, say, from the first generation of the Australian projects, which were essentially done with untested technology by junior mining companies. We would probably argue that Sherritt, with its experience in Cuba, Vale via Inco, its experience, the next generation of HPL does not have the same degree of supply risk that the first generation had. So even though we are projecting an increase in production, we are much more confident in our supply forecasts than probably had been the case in the past. Also, a lot of the production is coming from ferronickel projects, where again the operational risk is probably much lower than some of the HPL projects. So in theory, the nickel market is in oversupply. And I think this is against the background of quite positive demand growth, we feel, and relatively conservative supply growth. The problem is what this means for prices. Raises a number of questions. Will prices respond to a surplus? A problem for most fundamental analysts is whether the relationship between inventories and prices has completely broken down. Then, how large is the unreported stockpile? Because essentially, when you look at the supply-demand balance for last year, reported inventories declined, I think, by 4,000 tonnes, but most analysts, including ourselves, had the market in surplus, and the difference between the two was the build in unreported stocks within China of anything from 30 to 50,000 tonnes. Another point which is very hard to quantify is whether the NPI producers within China will act to swing capacity. There is a belief that they are high-cost producers. They are much more price responsive than the integrated producers. I would say that has still got to be proved to be the case. And then investment funds gone a little bit quiet. Our contacts with investment funds suggest that a lot of them are seeing commodities as a macro play rather than looking at individual metals. And if they look at the fundamentals of nickel, maybe nickel would not be too high on their radar screen. This is sort of the problem that we have in terms of wondering where prices are going, even though we have the nickel market in oversupply. In that essentially the relationship between inventories, particularly those on the LME, and prices has sort of broken down in that current inventories could lead to a price of maybe $23,000, or it could lead to a price of closer to $15,000. I think we have to learn to live with the fact that this relationship has broken down, and this is sort of highlighted very much so in this chart, which is a fairly standard, that the price gains seen here from the post-Lehman low obviously came about at the same time as inventories rising sharply. What we do at Thomson Reuters GFMS is to give three price scenarios, and I think one has to do that, not to just cover oneself, but to take into account the different scenarios that are coming about. Our base case, which essentially is suggesting a period of stability in the nickel market, which has really been the case. The average annual prices have been pretty close to $20,000 per ton for the last 4 years. That's assuming our price forecast this year is correct. One is relatively strong underlying demand growth, and I think the key thing is that what has emerged now, I think an earlier slide suggested that China accounted for 42% of nickel consumption. What we've seen is a desynchronization of the demand scenario, in that the strong growth in China has continued, and that really has offset much slower growth and also as the cyclical downturn within the Euro, North America and Japanese markets. So the bottom line is that I'm not sure that going forward that the nickel industry is going to have to cope with quite the same sharp declines in demand that has characterized previous cycles. Base case, I think supply is critical, and it does depend on your assumptions about the ramp up of the greenfield capacity. But this greenfield capacity, I think it should be mentioned that Barrow, Alto, Onca Puma, Goro are already on stream, and they're just being slowly ramped up. So my understanding is that the risks associated with higher production from this source are less than maybe history might suggest. We are suggesting that there'll be limited growth in MPI output. This, in part, which I'll discuss later, reflects the potential for there to be lower exports of nickel ore from Indonesia. Then it's whether any increase. No, we're suggesting that inventories will increase by 30,000 tonnes this year. It's whether it's going to be visible on the exchange, and our general view is that most of it will be off exchange, and therefore will have less of an impact on prices. Investment activity is very difficult to quantify, but our conversations with a lot of investment funds is that no, they invest in commodities not because of the fundamentals, but because of a view on the macroeconomic situation for the global economy. Also, a lot of these investment funds are based in the US, and inevitably a lot of their thinking is not just on China, but it's also based on underlying fundamentals within the US economy, which, let's face it, are becoming increasingly positive. So even though some of the fundamentals for the individual metals, such as aluminium, nickel in particular, may not be particularly attractive, they are going to benefit from this macro view that investment funds take. As I say, difficult to quantify, but one cannot ignore. An earlier slide sort of highlights a little bit of stability within the nickel market, but there are various scenarios. And obviously everyone in this audience will be aware that nickel prices briefly exceeded $50,000 per ton. So to put that in perspective, our high case scenario, $30,000 per ton in 2013, is not that extreme. No, it's slightly stating the obvious, but there is the potential for a ban on nickel ore exports. This may not come about until 2014, but there are various factors which suggest that the Indonesian producers are not in a position to convert their nickel ore into a higher value product that the government might wish. A lot of it is logistics, in the nickel ore mining operations are located in areas where you cannot construct a processing facility. Then a lot of the nickel ore production from Indonesia is also coming from small scale operations. So these companies are not in a position to construct a processing facility. So we doubt whether the attempts by the Indonesian government to put a higher value on their nickel exports in the form of an intermediate product rather than nickel ore will be successful. The high case also lower than expected output from greenfield projects. This is pretty straightforward, and it's just saying that what has happened in the past with Australia, with the delays, also of the current projects will continue to be a feature of the market. And I noticed when Sherritt International outlined its financial results for this year, or for last year, sorry, it sort of highlighted still 3 factors that could delay the commissioning of the Ambatovi project. And this goes down to operational difficulties in terms of not having tested the project due to the operating rates that it plans. Also, it highlights problems of getting staff, educated and experienced staff to manage the project. And they were talking about this even though the project has been in development for 4 years. So it just sort of highlights the potential, and it's not just for Sherritt. I'm sure the comments that they made are equally applicable for most other projects which the nickel industry is relying upon. Other things that could send prices higher, strikes. No. Obviously, the example is Vale, and also one has to look at the wider issues where strikes are increasingly prevalent in the copper industry in particular. But it just sort of highlights the fact that Labour is in a position to try to secure a bigger slice of the nickel pie or the copper pie in that respect. And demand growth. Obviously, the focus at the moment is on euro debt and other issues, and the possibility of slower growth within China. However, we are in a low interest rate environment, and we believe that this could potentially filter through to a faster growth next year. A low case scenario. I think obviously there is still uncertainty about demand, but it's whether prices are going to fall back to, maybe for the nickel industry, whether prices are going to fall back to the post-Lehman lows, or whether the wider fundamentals, particularly of the fact that the Chinese nickel pig iron producers may be more price elastic in their response than others, is going to provide a floor in the market. So that would be, we feel that even if demand does weaken in 2012, 2013, the supply response could be much more swift than in previous cycles, primarily due to the Chinese nickel pig iron sector. This sort of highlights our price projections, which were covered in previous slides. I think the key thing is that even under our low case, while accepting that there is the potential, obviously, for a correction in prices, but even under our low case, we see prices trending high, primarily due to cost pressures. And our base case is one of greater stability, which to us is merely a continuation of the trends that's really been seen for the last 2 to 3 years. While for the high case, again, probably Chinese nickel pig iron production comes into play in placing a cap on prices, which in theory should preclude a return to the levels seen in the previous bull market of above $50,000 per tonne. So our general view of the market is that despite seeing an oversupply situation, we feel that, particularly given the emergence of the Chinese nickel pig iron sector, that period average prices will be very attractive for the vast majority of nickel producers. Thank you.
Neil, thank you very much for a detailed overview of the nickel market. Do we have any questions? Well, maybe I could just start the ball rolling, if I may. You mentioned that nickel pig iron has crept up on the industry with a bit of a surprise, and crept up with quite significant volumes quite quickly, and that the production could be a swing production in the nickel market. What sort of what do you think is the average price of producing nickel pig iron in China? So, and if the market fell below that level, would they respond very quickly to cut their production?
Well, is this working?
Yep.
Yeah. I think there are two things. One is what you think the estimate of production costs are and the marginal production costs, and we would say it's between sort of 18 to 19. I think the unknown is what will be the response of the whole industry, because at the same time they shut down some of the high cost producing facilities. There are consistent announcements of new capacity, and when you look at the capacity that's coming on stream, it tends to be sort of larger scale units, and by implication possibly lower cost than some of the very small, what you might call mom and pop operations. So even though in September and October of last year there was a lot of reports in the press about nickel pig iron production declining in response to a temporary decline in prices, at the end of the day, NPI production within China rose by about 30% last year. So you have these two things of new capacity being partially offset by closure, potentially, of the smaller capacity. So.
Great. Any further questions? You obviously covered it very well. Thank you, Neil. Right.